Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Carol Massar along Barry Ritholtz. We are live here at Future Proof in Huntington Beach, California. Bloomberg Radio's live broadcast from Future Proof, sponsored by JP Morgan Asset Management. We want to kick off our coverage this hour. We've got a special guest, Marlena Lee. She's Global Head of Investment Solutions at the Registered Investment Advisor, Dimensional Investing. They've got $740 billion in firm-wide assets under management. Welcome, welcome. Thanks for joining us.
Carol, so excited to be here.
Tell us a little bit about your firm, because founded about 40 years ago, but historically you guys look at academic research and then think about how that applies to investing. I am curious about research that you're finding interesting in today's market environment.
Yeah, so absolutely right, Carol. We were founded in 1981, so it's been 42, 43
You've seen a few
years.
cycles.
Yeah,
Wow.
Absolutely. And from the very beginning, our founders were actually folks who worked on some of the very first index funds, and they kind of really liked some of the ideas that were coming out of the academic research around different drivers of expected return, but also just that flexibility has value.
Yeah.
So from our very beginning, we had these ideas that, hey, you want really low-cost, well-diversified portfolios that an index fund would give you, but you do leave money on the table when you have the rigidities of an index fund. So adding some flexibility and using academic research to pursue outperformance is a winning strategy. And we have 40 years of track record to show it.
Their focus, if I remember correctly, David Booth began with the small cap factor and took that from a single fund that was slow to catch on, and eventually people figured out, hey, Booth seems to know what he's doing, and expanded into a whole bunch of other elements. French and Fama are advisors to the firm. You have like long-standing ties to University of Chicago, Dartmouth, like really fascinating academic backgrounds, including a number of Nobel laureates.
Absolutely, Barry. So we have, I think, 5 Nobel laureates that
That's
are
amazing.
associated in some way with the firm, either through as academic consultants, advisors to the firm, or on the fund board, so representing our investors in the fund. And they all joined and got involved before they won their Nobel laureates. So really deep academic ties. Yes, absolutely right, Barry, that our very first fund was focused on this small cap premium. That was well before smart beta or factor investing was a thing.
The original smart beta.
So, well, I like to call it pioneers of factor-based investing. You know,
That's
we were absolutely the first. Value came on the scene, of course, right as Fama and French were writing their 3-factor model paper. These days, we're looking at profitability, adding that to the lineup. Profitability is a fantastic complement for value because those premiums tend not to show up at the same times. So we do think that when you build a portfolio that focuses on both, you can help smooth out the ride.
You were a teaching assistant, right, for Eugene Fama?
I was.
Tell us a little bit about that.
Oh, is that true? Because
Yeah.
David Booth was Gene Fama's teaching assistant 40 plus years ago.
Yes, we share that in common.
Wow. How did that shape you? Or tell us a little bit about that experience.
Oh my gosh, it was the best experience. I would have done it for free. Yeah, I was
a Nobel laureate.
He wasn't at the time.
Oh, right, but he did become.
So before arriving at Dimensional, I was doing my PhD at the University of Chicago.
Right.
Studied under Professor Fama, and then became his teaching assistant. And when I told him, he was also on my dissertation committee. And when I told him I didn't really want to do the academic thing, he was so kind because my other advisors, they tried to convince me otherwise. But Fama, he connected me to Dimensional, and it's such a perfect fit because I got to continue focusing on this academic research that I had spent 5 years of my life learning and studying, and instead being able to apply it and helping to explain it to investors who deeply care, because it does help understanding the research just leads to a better investment outcome. I think if you understand that there's a more robust, a better way to pursue higher returns than stock picking or trying to time the markets. and just the confidence that it gives someone to be a long-term disciplined investors, which I think is really important.
Right.
To be able to stick with market downturns and
especially in an environment where trades move so quickly and react to day-to-day news events, whether it's company stock specific or just macro specific, that when you really understand the deep research behind something, right, you can have a lot more conviction behind an investment, whether to buy or sell.
Yeah, absolutely. I think that most investors are investing for decades.
Yeah.
And we should have a decade-long investment horizon, and the research speaks to decades-long of patterns and data, as opposed to like what's going to happen tomorrow or what's going to happen in the next few months.
So Fama French was a good couple of decades ago. Those first three factors were really interesting. Mm-hmm. You're essentially an academic at heart. What's the most interesting new research you're finding that might eventually become some form of real-life application of theory?
Well, there's always little improvements that we can make, but I would say profitability was the last really big one. Some people might think of it as quality.
I was going to ask. I think of quality as the last big one. You're using profitability in the same way as quality. So when I think of quality, I think of low debt, good management, no other problems. And you're just cutting that down to straight up profitability.
Just straight up profitability. And once you capture profitability, a lot of those other variables, they're not important for explaining
over
returns.
Revenue growth.
Well, revenue growth. So
it's just so funny. We talk so much about the importance of like growing your business because profitability, right? Profits you can play around with.
Well, let's back it up and just talk about why profitability should help explain returns in the first place. When you invest in a company, you get future cash flows. And it's all discounted back to a price today. That's the stock price. That discount rate is the expected return. So what we want is we don't get to look up the expected return in Bloomberg. Instead, we have to infer it from two variables that we can sort of see. We definitely get to see price today.
Right.
But we don't get a perfect view of those expected future cash flows. But it turns out today's profitability, just levels, are a pretty dang good predictor of those profits several years out into the future. The most profitable companies today tend to stay the most profitable companies for many years. Now, profitability growth is another aspect that does help a little bit, but the most important one to capture is the level of profits.
Yeah.
And then the challenge with profitability growth is it does introduce a lot of additional turnover. So it's something that we're actively partnering with Robert Novi-Marks, another academic that we work very closely with, to see if there's certainly something there in the data, but whether it would survive transactions costs, things like that are also very important before you add something to a live portfolio where you have to pay trading costs and things like that.
Yeah.
So I want to unpack why profitability has persistence into the future. And what's so different from just profits, because most people think of PE as their measure, but profitability means it's a company that sometimes has a moat and a strategic advantage, that they're not carrying a lot of debt that can eventually eat into future profits. What other elements are you looking at that explain why profitability tends to persist out into the distance?
That's a fantastic question, Barry, because actually across a lot of different measures of profitability, you see that companies with higher profitability have higher returns than companies with low profitability. You can look at a very top line number like revenues. You can look at net income, so at the very bottom. It all helps create spreads and returns. So that's really important because it gives you a better sense that that's something that's real in the data. You're not just cherry picking something that's really like a fragile academic result. Right. And so that's comforting. What we end up using in our portfolios, we call operating profitability, because we want something that's going to predict future profitability. So you don't want things that are super variable year to year or one-time events. So operating profitability gets to the heart of what are kind of a more stable stream of revenues minus costs. And that's what we see or what we use in the portfolios that is something that is stable enough where we can run a portfolio that focuses on high profitability names in a portfolio without a lot of turnover.
Is there an overlap between profitability and momentum, or is that just something completely different?
It turns out to be different. The thing that's more related to momentum or price momentum, which is what we usually think of as momentum, is earnings momentum is related. So Robert Novi-Marx did have a paper a few years back where he showed that those two things are quite related. We do take account momentum in the portfolios as well. But the thing with momentum, just like I was saying with profitability growth, is that it does tend to have high turnover if you try to pursue it directly. So a better way to take advantage of momentum is if you're already managing a portfolio, let's just say that's pursuing size, value, profitability, you want to trade a little bit every day in order to make sure you're focused on those premiums, not introducing style drift into the portfolios. But you can take into account something like price momentum at that point of trade. So I could say, hey, here's a stock I want to buy, but it's down momentum. Therefore, it should continue to underperform for a little while. Let's just wait before I buy it. Or vice versa. If I want to sell something that has up momentum, I could just wait a little.
I just want to follow up with that because
please.
I understand the way we use dimensional funds in our shop.
Yeah.
I understand the way they operate, but I want you to clarify something because I don't want people to misunderstand what you said. It's not that you think you have to trade every day for the sake of trading. The way I know the way you guys have run various funds are, you are opportunistically looking for your time and place to pick up specific things. And it's not like, hey, let's go trade today. It's let's see if anything that's on our buy list that we're looking to accumulate has become a more attractive price point. Am I doing that any justice?
So great. That's absolutely right. When I say we look to trade every day, the turnover in our portfolios is very low. So a core portfolio might have something in the high single digits. A higher, more narrow portfolio, like a small value portfolio, for example, might be somewhere between 20 to 30% turnover. Just to translate that, a 25% annualized turnover means when I buy a stock, I expect to hold it for 4 years. So it's a long holding period, which we think is really important because as you're incurring trading costs, you can spread that across a long holding period. But the daily rebalancing also just gives us a lot of flexibility. So those are index-like levels of turnover, like passive indices-like level of turnover.
Right.
But whereas an index might try to drive all of that turnover into defined reconstitution dates, 1 to 4 times per year, we can spread it across 220 trading days a year, which makes it really easy to control trading costs.
Marlena, does the macro change any of this, impact this? I mean, here we are, obviously in a, waiting the Fed meeting. And I do wonder, as the Fed's getting ready to finally cut rates, like it's a different cycle environment. Does the macro play into this?
I would love to be able to say, here's when the premiums are going to be higher or lower, but the data is just too noisy. So we view, at least in these equity portfolios, we want to be focused on these premiums day in, day out. And macro environments don't really change that view. And it goes back to that idea for why we see these premiums in the first place. It's low prices combined with good future cash flows.
Right.
And that should always indicate higher expected returns than something with a high price and low cash flow. And that's true regardless of what the Fed's going to do, recession, expansion.
Regardless of recession, long recession, doesn't matter.
Those premiums are not correlated with all of these macroeconomic variables. And we would love to be able to figure out, to crack the nut of how to focus on these premiums during certain times. But we think it's best to do it every day.
Really interesting.
Very cool stuff. In a nutshell, 10 seconds. The market environment, an interesting one, a hard one, a complex one. How would you describe it?
It's always complex. It's always changing.
No, that's the easy answer.
It is easy. But I do think that when you have a long-term view.
Right now, today, it doesn't matter. Or what?
It doesn't matter. Like, we're going to be positioned on these premiums.
Yeah.
Regardless of. And that's part of why our clients like us, because they know what to expect from us.
It's really interesting, kind of a healthy thing, right? When we're so day-to-day to talk about the long term.
I always think of dimensional funds as indexing plus. It's indexing, but a next level, goes beyond it.
Very cool stuff. Marlena, thank you.
Thank
Really
you.
appreciate it. Marlena Lee, she's Global Head of Investment Solutions at Dimensional Investing, joining us right here on Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
You are listening and watching Future Proof. I'm Carol Massar along with Barry Ritholtz, and we should point out that Bloomberg Radio's live broadcast from Future Proof is sponsored by JP Morgan Asset Management. All right, we do want to get to our next guest. She is Joanne Bradford. She's President and Chief Money Officer over at Domain Money. It was founded in 2022 by Adam Dell, former head of product at Marcus by Goldman Sachs. It's a financial advisory firm, and her background is killer. We're going to get into that because she was Chief Revenue Officer at Microsoft, President of Honey, COO of SoFi. Welcome, welcome, welcome. And you're a friend of Barry's.
Of course.
How are you?
Good, thanks.
Talk to us a little bit about the environment today. And when you come to an event like this, what do you want to hear? Who do you want to hear from? What are the questions you're asking of people?
Yeah, I do two things here. I advise a company called Wealth.com, and they announced a $30 million Series A led by Google Ventures and Citi.
Congratulations.
Yesterday, which was exciting. And it shows you that, like, hey, look, it's time for some automation and some technology and for some AI to be applied to this category, because it's sort of the last one to break. You know, I was in the advertising business, which they said it will always be sold over martinis, people to people. And this business has said the same. And I think we're sort of seeing the beginnings of that in this part of the business. Not, you know, like the Visas, MasterCards, Plaids, Stripes, those things, but actually in the wealth management side of it. So it's exciting to see that, to be a part of it. I think there are sort of two camps here, and all the people I've talked to. One is, hey, look, I'm just going to keep doing what I'm doing, and I hope that I get to the end of my career before the iceberg melts. And then there's other people that are like, no, I actually am going to try to change this. I want to be digital first. I want to go after millennials. I want to talk about how people have different needs around their money today. You know, so those are the two sort of camps, and I think it sort of happens in every industry, but it's clear it's playing out here.
Joanne, are those two very different generations? Is it philosophical, or is it the 50 and older group is like, I'm just going to run out the clock, and the 30, 40-somethings are like, no, it's got to be digital, it's got to be technology. That's what our clients want.
I think it's both the providers and the customers, right? Because, you know, I think the last conference we were at, they said, you know, in the next 10 years, a third of this industry is going to retire. And then, you know, I worked at SoFi, and we built a digital-first tool, right, where everybody wants to do everything on a device, wants to have it done, and then they still do want to know that there's human and a person that understands their values on the other side of it. I think it's happened everywhere in life except in personal wealth management. So it's finally going to show up here. But it's not, we're not quite ready for it yet.
How does it change? How do you see the transformation in terms of it becoming more digital or you know, an embracing of technology?
Yeah, I mean, I have a private wealth manager. I don't really want to talk to them. I just open up my Schwab every day and look at it. And then
first stop opening it every day, please.
I like it.
We'll get it once a week.
It makes me feel good.
We just had a conversation about long-term investing.
Right. Every day is too much.
Every day, but I look at my Amex bill every day. You want to show me your Amex bill on the credit card? Like, what did I buy?
When my husband says, let's look at the Amex bill, I'm like,
well, I do it, you know, and this morning I was like sitting watching TikTok. Next thing you know, I'm like, ooh, Apple Pay. Oops, bang. My husband calls it the BOD, and he's not talking about board of directors, box of the day. So he's like, a box of the day showed up for you.
But what does it mean for estate planning and tax planning and educational planning? Like, how do you guys think about it? Because that's your world.
Yeah. So let's talk about Domain Money for a second. So our average customer is 39 years old, makes $250,000 a year, and doesn't really want to put their money into AUM.
Yeah.
They have made some money. They're trying to figure it out. They might have some stock. They get a bonus, and they just don't know what to do. They're overwhelmed. They may have gotten married, may have gotten divorced, and they want some professional help. So it's a flat fee financial plan. We sell one for $2,500. We look at all your expenses. We look at all your spending. We analyze it. We use a bunch of technology, some AI. We put together a plan with a paraplanner, and then we give it back to you in a 90-minute discussion. And then we set up a discussion after that with all your to-dos and follow-ups. Well, actually, log into Zoom, your Schwab account on Zoom with you and help you change. Like, move that there, because that's really where people freak out, is they don't know how to do that. Our NPS score is 10 out of 10.
What's NPS?
Net Promoter Score. It means, would you recommend it? And we use it again. And on a 1 out of 10, that's unheard of. We get a 10.
That's a perfect score.
It is a perfect score, because everybody at the end of it is like, wow, you helped me, you heard me, I got value, and I know what to do. We have a $2,500 version, a $4,500 version, and a $7,500 version. Most people end up taking $4,500 because they want actually
a
extra
year
help.
or
one-time flat fee.
Okay.
And then they can come back to us for $300 to $500 an hour to be like, hey, I want to check in on this.
How sticky is it? How long do people stay with you guys?
Well, I mean, they come back a little bit every couple of years, but I think it should be like the dentist.
I guess so, right.
If you're using a sonic toothbrush, maybe you don't go every year, right?
Mm-hmm.
The dental industry came up with you need to go every 6 months.
3 times a year. They want cleanings 3 times a year.
That's ridiculous.
But I wonder if you can tell there's a trajectory of somebody
Yes.
who comes to you when they first get married, and then, or maybe they go through a divorce, they come back, and then they get married again, and then they have kids, and they have to think about college planning, and then they have to think about, retirement. So do you see that trajectory with your folks? That's what I mean by
there's
sticky.
4 personas. There's the 29-year-old that's like, hey, I need some help here. I have a good paying job. And I like to be prepared. I call them like sharp pencil people. They're like, I want help. I'm going to hire a trainer. I'm going to go to a therapist. I'm going to have the best of everything. Check. Then the next group is like a 39-year-old that's like, I didn't do anything. And please help me catch up very fast so we can do that. The next group is a 50-year-old who is like, wow, I had something happen in my life. Health in my family, divorce, partner. I hate my career. I can't do it for the rest of my life. And I need to know, how do I get out of this?
Yeah.
And they want a financial plan for that. And then there's a group of people that need to help family members, where they're like, hey, I'm now the sandwich generation. I have to take care of a parent and I have to take care of a kid. And there's really not anybody that serves that, right?
So real.
So
those
like
descriptions.
And I listen to every conversation. I know this audience from my time at SoFi. And there's nobody really serving that market, right?
Interesting.
We don't tell them what product to use. We're like, use Fidelity, use Schwab, do whatever. And my entire sort of mission in life is, I don't care who you use for your financial plan. I just want you to actually have one. I don't care if you do it yourself. I don't care if you sign up for, Mrs. Dow Janes and take the course. A friend of mine the other day, she works at Apple. She has worked there for 13 years, never sold a share of stock. I said, how do you manage your money? And she said, I'm taking a course on the weekends. And I said, okay, great. And, she's mother of 3. She's like, I got to save for college. I have to do these things, da-da-da-da. And I'm like, well, I'm glad you have a plan, right? And she paid $3,000 for that course. And I'm like, well, you could have just paid someone to do it for you and not spent your Sundays in a course, but like whatever. I'm just happy that people are doing something, because you and I know the power of compounding, the power of starting it off, and it just really matters. And so at SoFi, I saw so many people with student loan debt. I, met thousands and thousands of people. I had dinners with them once a week. And I know this customer, and I know most people do not pay attention to their finances.
So Joanne, you started out by discussing how it's digital first, there's technology driven, but what I'm really hearing from you with these 4 different categories of people are that they want somebody, a live human, to talk to and hear what their issues are. How do you marry technology with live human advice?
Well, we do it all on Zoom. We have an app where they upload all their documents, makes it easy for them. We give them the report and the action items afterwards. We let them schedule all their meetings and times via technology. We follow up with them. So everything that is possible to take out of the process of friction of humans, we do, except that conversation and the review of the plan and the input and really understanding your values. Some people are like, I want adventure. Some people are like, I want a career. Some people are like, I'd like to get rid of my spouse. There's just, everybody has something, and they want someone on the other end of it to hear them and to acknowledge
What's
them.
the most common mistake? Is it just people not having a plan?
It is just not knowing the number, not ever looking at the numbers.
What do you mean? No, just everything?
Yeah.
It's in their head. It's sort of juggled like, what's your checking balance? I don't know. It's around this.
I'll give you a perfect example. I was talking to
And just got about 40 seconds.
a Bloomberg reporter one day, and she said,
Not me.
I have student loans. And I said, well, how much do you owe? What's your interest rate? And when will you be done? And she said, I don't know. I just know one day it'll be gone. Okay? So I don't care who you are. You got to look at the number.
Really interesting
I mean,
stuff.
if you don't know what you have, how do you figure out?
No, and most people don't.
Yeah.
They just don't.
Really cool stuff.
So fun.
Really cool stuff.
Really cool stuff.
I'm kind of taking notes, going to share it with folks.
I told you before she came on, she's
You
a
did.
fascinating person with an amazing background, and I love how she's combined technology and human advice into one, and bringing SoFi in with the student loans on top of it.
It is pretty
Yeah.
cool, like how all the stuff you did led up to where you are.
Honey, coupon code, one-click coupon code. We sold it for $4 billion. There's always a tech
PayPal.
solution.
There is-
There you go.
Exactly.
Yeah.
Thank you so much.
Okay, thank you guys.
You bet. Joanne Bradford, President and Chief Money Officer over at Domain Money.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We mentioned this yesterday about the great wealth transfer. Baby boomers, the silent generation, they're going to pass down a combined $84.4 trillion in assets to younger generations. This is going to happen in the next couple of decades. Our next guest, safe to say, is pretty familiar with all of that. With us now from Future Proof is Tim White. He's co-founder and chief growth officer at the estate planning platform wealth.com. How are you? And nice to have you here with us.
Oh my gosh, I couldn't. This is
Is this
absolutely
your first
amazing.
year here?
This is our second year at Future Proof. We absolutely love it. It's just great to be immersed in this advisory community. It's absolutely incredible. So love the energy.
Well, it is great energy, and there's something about being outside and next to the beach. I'm not going to lie. The positive or negative ions that come from the ocean, I don't know what it is. Having said that, there's a lot of firms that are here involved in the management of money. What are the kind of things that you're looking for, or the conversations? There's various panels. There's one happening behind me. What are you looking to find out?
Well, I think it's a really exciting time for us here at Wealth.com. On Monday, we actually announced a Series A led by Google Ventures, GV, followed by Citi Ventures, Outpost, which is Neuberger Berman, and also Firebolt. So we're really excited. We're running with that energy. And I think for us, it is a very exciting time. You talked about the great wealth transfer. I mean, nearly half of all assets over the next 2 decades are transferring over, right, to a new generation. And so part of that is how do we empower advisors through technology? And it's just an exciting time to be at wealth.com because, as a founding team for GV, for us, they have just such an incredible track record of supporting advisors with big aspirations and big ideas to make a generational company. And so we couldn't be more excited to be here and just to be around this incredible advisor community.
Tim, talk to us about, does Google Ventures get involved? Do they is it a financial investment, but do they also, understanding of technology, of data, the power of it, the impact, what it can do, the productivity of it? How else do they assist you guys in what you're doing?
Carol, that is an absolutely fantastic question because when we actually ran the Series A, there were so many investors interested in our organization, but GV was absolutely the right fit is because of just their expertise, right? Not only access to incredible talent, but also how we can supercharge our AI capabilities within our ecosystem. Because here at Wealth.com, we are just really focused on building the most complete, most comprehensive ecosystem in the market. So whether there's an advisor here, Carol, that is serving the mass affluent, high net worth, or even the ultra high net worth, that is Wealth.com. And so they're going to be here to really help us supercharge things.
Well, tell people who might not be familiar with you guys. Bloomberg, it's a smart audience, but remind people about what you do specifically. And I'm curious about your demographics. Who are really tapping into your services?
Well, that's a great question, too. So, yes, we are a digital estate planning ecosystem servicing advisors that have clients across the entire wealth spectrum. So whether it's a client or a household that needs those foundational documents, or even even working
some basic stuff like can
Oh,
be.
but not this there, Carol.
Yeah.
We work with the ultra high net worth as well. So families that have $100 million plus in assets, we're helping them visualize those complex estates. And so we are the one-stop shop for big, large firms to be able to supercharge their estate planning strategy and empower their advisors to have these incredibly important topics and conversations. You know, today, Carol, 60% of Americans do not even have a will in place. Can you believe that? And 40%, well, there's a probably good share of them that actually need to do a restatement. And so having technology be able to accomplish that is a big thing, and we're here to solve big problems.
Well, and to be fair, we had a conversation with Joanne over at Domain Money, right?
Yes.
Like, so there's a couple of you guys, right, that are out there certainly helping people think about, okay, what's my complete holistic financial picture and what do I need to be taken care of? I am curious about, you know, the majority, you say you have clients, you know, all different types of spectrum. Is there, though, a demographic? Is it people getting their first big job? Is it people getting married? Like, when do people often come to you?
Absolutely. So we power the financial advisor. So we work with all different type of advisors, whether they are working with the family office.
That's
or
right. You
they're-
provide the services for those people.
Exactly. So we power those conversations. So it can range for a variety of different type of client, right? They have a new family getting those foundational documents using our AI capabilities. Like, just case in point,
Right.
A new client comes to an advisor. They used to have to sift through those really complex legal documents. We have AI capabilities, and this is what GB's really excited about, to read those existing plans, pull it into a visualizer report in layman terms to be able to sit with the client and say, look, it's time. You created this plan about 20 years ago. Let's set you up with the restatement. Let's give you access to wealth.com.
So this is happening already?
Yes. It's an amazing time for the space. We work with actually over 500 institutions.
Right.
We have some massive partnerships we're going to be announcing in the next few weeks as well.
Tell me about the technology curve, because obviously we have all been all in on AI over the last year and a half or so, Tim, and I think we've seen a lot of spending on the infrastructure side of it, the build out, but you guys, you know, obviously it's already happening, right?
Yes.
The generative AI, the large language models are already adapting what financial advisors can do in those companies.
Yeah, so Carol, this is the uniqueness about wealth.com. When you think about the landscape, the category, the founding team, myself, our CEO, our executive chairman, Ray Carvalho, we come from technology. We created a fintech that we scale globally, working with large financial institutions, leveraging machine learning, leveraging AI, and we sold the business to LexisNexis for $500 million in 2019. Right. We actually took that expertise, that A players from that company over to wealth.com to supercharge this, and bringing in that into our DNA has been so important, because what makes us unique, this is all done with technology, but also with a human touch as well.
But what's different? Because as you know, Tim, I mean, AI we know has been around for a long time. And so I always feel like, you know, we're all talking about AI, but it's not like a new thing. So tell us about, like, what's the next level of everything that we've been talking about in the last year and a half, in terms of what it can do and help financial advisors going forward.
It's all,
because some say it's, you know, we're scratching the surface in terms of what it can do.
Yes, and I think we are scratching the surface. I really, truly believe that. But it's all about efficiency, right? We're the firm for the advisor.
Yeah.
And for us, how we look at
Not
AI,
everything needs a human, essentially?
Not everything needs a human, but there is a role for the human.
Yeah.
And we've seen that too. I mean, look at several years ago, it was all about the robo-advisor to disrupt. The advisor is never going to be pulled out of that very important relationship with the household and the client. But how do we make his and her role more efficient? And that's using AI. That's using technology. And that's using the skills that we have to read through. Again, some of these legal documents are 60 pages. To be able to read through that instantaneously, extracting all that important document in that data.
I'm looking forward to the AI chatbot or AI power tool that looks at a document and said, okay, 99.9% of this is
yes
unnecessary.
Yes.
Here's what you really need in like a couple of sentences.
Let me
seriously.
Let me just tell you this.
We've all been there.
We are going to be really launching this in such a direction. We're crossing new frontiers. Look at us in 5 years. It's going to be remarkable.
All right. So, okay. I don't know. Take us 5 years from now.
Yes.
What is it going to be? I go to my financial advisor. I open up my laptop or I pop up my phone. Like, what is it?
It is. It's going to be there. It's going to be a living and breathing ecosystem that is dynamic as your life, that's feeding you that important information, because estate planning isn't a one-and-done transactional thing.
Right.
It moves because your life evolves. Whether, Carol, you're in California, you moved to New York, you need to be notified of that, and those documents need to be optimized for that state. And that's the type of stuff we're going to be doing. In addition to that, what we can do with scenario analysis as well, really empowering the advisor, informing the client, because this is extremely important.
So what do you mean? Like, you can play, all right, so perhaps I do this and that.
Yes.
What does it mean? How does it impact my financial trajectory?
Exactly. And that's the power of wealth.com.
What's the tricky part of this? And part of me, like my, radar goes off in terms of it's a lot of information, right? That's
Yes.
out there increasingly in the digital world. It's already out there in many ways, but it sounds like this is going to take it to potentially another level. What do we have to be concerned about? What are the risks in all of this?
Honestly, the good thing about this is Wealth.com's prepared. As an organization, we actually process transactions with American Express in 28 countries. Bringing that level of security to a firm is extremely important. So that is number one. And then also for us is giving the right information to the advisor. Don't overwhelm them, and do not overwhelm the client. And that's the problem today, even with the traditional model with estate planning attorneys. You get a 60-page document, I could walk around this event and say, who's actually read through this? I'll give you $10,000 if somebody has.
Probably nobody.
Absolutely.
What's also interesting is I'm thinking about the money that you're getting from Google Ventures. You talked about GV. What do you guys do? Is it all about being paid, investing in technology? Like, what do you do with it?
I think the unique position of GV, both on to be able to work with us to develop the technology, but access to talent. It's all about growing our team in the right and healthy way and bringing additional experts to already amazing organization.
You sound super optimistic.
I am super
I'm always
optimistic.
a little cautious. But as we move forward, because it does feel like the financial world, we've talked about fintech for a long time, right? But this is something different.
This is. I will tell you this. Why I'm optimistic, I have an experienced team. I've done this before. We have a track record. And I'll tell you something, walk around Future Proof today, you're going to feel the excitement of Wealth.com. You're going to see it now, especially after this conversation. So I hope that you actually stop by and talk to the team. We should get you, where are you with your estate plan?
Well,
time for a restatement?
Probably always. Well, so as you go around here, who are the voices that you want to be talking with? Obviously, a lot of the probably big financial advisory firms, right?
Honestly, when you're building a brand like Wealth.com, I want to speak to every single person at this event. I want to speak to every single person. One thing that we do really well here is marrying phenomenal people with great tech. And we've built this brand based off of the evangelists within our advisory network, our community advisors. They're out there actively running around this event selling our product. Couldn't be in a better position. And that's why GV invested in us.
Yeah, and so what are in terms of the financial advisory community, as you say, they want things that are going to be easier, right? Make what they do in terms of serving their clients easier. What else are they looking for?
They're looking for a team that understands integrations, right? So you have all these disparate technologies, and how can somebody bring it all together? That's also a strength. We API connect to all the major CRMs, the major planning softwares, and even into larger firms' proprietary systems, so they have access bi-directionally to this important data.
What's the long-term plan for you guys? Do you go public at some point?
I would 100%. IPO all the way, Carol, all the way.
How long? You obviously are getting money,
yes.
right? And we've talked about this for a long time at Bloomberg, how there's a lot of money out there in the private markets, which gives you a certain luxury, right, as you do the build-out. I don't know. Is there a plan? Is there a trajectory?
There is a trajectory. There is. And there's a few stadiums out there that I can imagine Wealth.com being on, okay? So, yeah, we have big aspirations. Look at our team done it. We've done it before.
Right.
We're going to be patient in what we're building here, and we're going to build it right. And we want Wealth.com within the advisory community to be actually enabled to every single one within our group.
As I kidded you before about your enthusiasm, and it's pretty fun to be, and I feel like in general, and as we kind of, Barry, when he's here, we're talking about, it's hard not to when you're in California and you're near a beach, and this is a really wonderful event to have a financial conference. Having said that, there are some real concerns, in terms of the economy, the elections, geopolitical risks, macro concerns. We're talking Fed policy. We're talking, could there be a recession? Any of that impact eventually, or does tougher times make you need to do what you're doing even more urgent. I'm just curious about the macro environment. When you're building out a business, it matters. You did get money, and that is going to keep you going for whatever. But I just do wonder about the macro environment, what that means for you as a business owner.
Carol, I'm going to
you guys running your business.
I think that's a great question, and I'm going to go a little bit backwards before I go forwards.
Yeah.
The company that we created in the past was in the actual account opening work stream and also the e-commerce work stream.
Yeah.
We sold it right before COVID. Could not be a better sale, right? I also look at, I know, right? It was a great success for us with Email Agent, also for LexisNexis, one of their most successful acquisitions. And that was really important for us. Now with Wealth.com and seeing what's happening in the world today, the demand for estate planning is going nowhere. Now, is the demand going and paying, $10,000 for these foundational documents, or getting it through your advisor as a value add, right?
Right.
It's going to be really, I think, a great position for us, whether the economy booms or it slows down.
Yeah, and I guess we've seen more and more wealth creation, certainly in society, right? There's more demand. Do you think about it, as you say, you're serving advisors. Is it going to be, though, what you guys are doing available for all of the economic strata, if you will, ultimately? Is that the thinking?
100.
I mean, I understand for the high net worth. And
No. But so for the mass affluent, high net worth, and ultra high net worth, that is the solution of Wealth.com. One of the things, though, we're very principled. We love our go-to-market and selling through financial advisors, and that is always going to be our strategy, is solving the problem statements of this wonderful industry and event and the people here that they're dealing with on a day-to-day.
Yeah, I think that, if I think about the Bloomberg audience or people who use an advisor, they just assume they're there, they do their thing, but there's a lot that's going on, or that can be transformative of ultimately in the next few years, or even sooner because of technology.
I would say this for
it is already.
Carol, for your audience, I would say find a Wealth.com advisor. No, I'm just...
Shameless plug.
Shout out to our wonderful advisory community. But thank you so much, Carol.
Interesting stuff. Tim White, thank you so much. Co-founder and Chief Growth Officer at the estate planning platform Wealth.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, it's time for the Drive to the Close. Today from Future Proof, Bloomberg Radio's live broadcast from Future Proof is sponsored by JP Morgan Asset Management. So let's get to our Drive to the Close guest. I'm Carol Massar along with Barry Ritholtz. Dana Dioria is with us, Co-CIO of Envestnet. It's a fintech company, offers software and services for the financial industry and financial advisors. Welcome. How are you?
I'm great. Thank you so much for having me. I'm happy to be here.
I didn't get to tease this, but you have talked about our notes that you shared with our producer that inflation is the fly in the ointment. I get that. So with a Fed meeting and we're all like, there's expectations and there's a lot of debate and investors, traders thinking it should be an aggressive move. They still have to keep a watch on inflation, don't they?
They do. And what's funny is, and we saw retail sales today.
Which is good. It means the economy not falling apart.
What inflation?
There's goods and then there's services, and I think we're seeing a pretty big split, right? And so goods, interest rate cuts are needed. Services, I think they're still going to want to keep an eye on. I've been it's going to be a 25. It's hard for me to believe that they're going to take their hand off and do a 50 right out of the gate. But
it would be very unlike this Fed, and I feel like Jay Powell, right?
I agree with you. I think, and there's a lot out there around inflation coming in waves, and yes, maybe we've got a handle on it for this time around, but it could come back. I think 25 is the safer bet, and I still would say 25, but it wouldn't blow me away if it ended up being 50.
Yeah, this seems like a very timid, cautious, why are we taking chances type of Fed.
Totally.
And every time we talk about the Fed, I feel obligated. It's like my disclosure. Inflation peaked in June 2022. The Fed was late to recognize its start, its peak, its finish. Is it fair to say they are institutionally behind the curve? That's just the nature of a big conservative institution?
Yeah, I think they're going to act with a little bit of a lag. My polite way, right? To say,
I can say it. You have to be a little more circumspect.
Yeah. I think.
Wait, haven't they lagged a lot already?
I think. Well, I mean, there's a whole narrative out there around we're way behind on these cuts. That and a lot of it too is why do we think we're having these cuts? Is it just to get to neutral, or is it because we actually think that we didn't stick the landing, that recession is coming? I mean, that's a debatable question as well. But I think when you're looking at the cuts and you're looking at the Fed, they are not quick to want to act. They have a dual mandate. Unemployment is still pretty tame, right? I mean, we're certainly seeing a cooling in the job market, but jobless claims still don't speak to having something like a bazooka 50 basis point rate cut for a Fed that hasn't really wanted to take that kind of big action.
I also wonder about the elections. Like, do they want to do something like that? Whether or not they say, they're not political, I do wonder about the appearance of that.
Yeah, well, I mean, I'll simply say, if you look historically, typically in an election year, you get, some easing, right? Like, that's not an unusual thing to expect in an election year. I don't think this Fed is really looking to be political. I mean, I really do think, Barry said it, they're cautious, and they're just, they're moving cautiously. And some of it, too, don't forget, the markets are going to front run anything that they do. So whether they give us a 25 or they give us a 50, if they give us the 25, but they say, you're going to get 100 by the end of the year, it's kind of takes you to the same place. It has the same impact at the end of the day. And so they're willing to do that.
So you mentioned retail sales. One can't help but notice the bottom half of the economic strata is carrying a lot of credit card debts. We had a guest yesterday talk about not a big uptick, but a modest uptick in credit card delinquencies and defaults is starting to show. It seems like the higher rates are falling disproportionately on those lower-end retail shoppers.
I agree. The COVID money's gone, right? And we've eaten through that buffer. I also think, look, let's not forget, inflation coming in line doesn't mean the level of the prices are going down, right? We have to have, we all know.
We're just not going up
as much. And so, it was a big increase for people to take. And when you talk about the lower income groups and trying to keep pace with, even discretionary needs, let alone non-discretionary needs, and needing to borrow maybe to kind of make those ends meet. So they're sort of facing this double whammy of much higher prices than just a couple of years ago, and then on top of it, really high interest rates. And so yes, I agree. It's not a great place for kind of common man.
So the two follow-up questions: we know wages have risen fairly in line with inflation, but real estate is probably the thing I hear more people complain about, especially first-time home buyers. What might a series of rate cuts do for that audience?
I think it could unlock that. I agree. I mean, it's interesting you bring that up, because in my discussions with advisors, and of course they're working with people, they're talking to them about all their problems, not just how do I allocate my financial assets. And they're talking to them about things like, my kids can't buy a home. Or they put in an offer on a house, and they were beat by like $100,000 to try to get this house or whatever. Just crazy kind of premiums being spent on the existing homes, and that they can't get into the market. So I think this is a major concern for people. I think advisors are worried about it from this, not only from the standpoint of whatever allocations from a financial perspective, but to your point on just the real estate market in general and what their clients are facing. But I do think rate cuts can start to unlock that, because bringing rates back down, of course, under where a lot of those mortgages are.
Mm-hmm. Dana, the panel you're involved in here at Future Proof is about the future of investment delivery. How are you, thinking about where that all goes? We've been talking increasingly about the role of technology and how that can change things. But what are your thoughts? What's your vision?
Yeah, so coming from Envestnet, a wealth tech ecosystem, we're really, from our perspective, it's about outsourcing to managed account type solutions and really bringing scale. And I add to that we see the future of investment solutions as leaning toward personalized services, personalized solutions this is,
Is that courtesy of AI or something else?
I think it's just look at today. Look at your smartphone.
Yeah.
All the recommendations it serves up to you, the expectation you have around.
Kind of drives me crazy. Does it drive you crazy?
I turn most of my notifications off. I can't be bothered.
But not.
Sorry.
But younger generations aren't, right?
She just called us old.
They're. Hey, I'm right there with you.
No. Okay.
They're looking for personalized services, and they're going to expect that from their financial advisor. And Gen Z actually wants a human being in the room with them.
Yeah.
But they're going to expect technology to bring personalization. And the only way an advisor can do that is with tech to scale those types of solutions. Direct indexing, tax overlay, high net worth type services.
Yeah, I like the combination, though. I think there's a lot of things tech can take care of that you don't necessarily need an individual, but you want an individual for the stuff that really matters. This was fun. Thank you so much.
Thank you.
Really appreciate it. Dana Dioria, Co-CIO of Envestnet.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.